Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's talk about Tesla once again. And for once, we can say Tesla closed in the green, up 0.13% on the day. A phenomenal green day, just completely rocketing to an absolute stratosphere. But all jokes aside, I mean, yeah, we'll talk about Tesla as per usual. If you enjoyed the video, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, my membership section is live. The link is down below. If you're interested, for $3 a month, you get access to all my intraday thoughts, posts, etc. I'm starting to post options flow as well from Cheddar Flow, which we'll talk about later on in the video. It's going to be something I will be adding to the videos themselves as well. But of course, here you'll get it sooner, etc., which is a paid service. Which is it's like $80 a month, which is it's pretty sweet. Actually, I'll have a link down below. It's pretty damn useful stuff, honestly, to get an idea of options flow. But nonetheless, if you want access to that, the link is down below. But let's just jump right into it. Tesla closing the day, like I said, up, believe it or not, 0.13%, a phenomenal green day for Tesla, while the market was up market was up a lot. It's almost 2.1% on the QQQ. Tesla should be up like 4% if it decided to follow QQQ. Obviously, it has not been following QQQ. At this point, it makes me wonder if the market needs to crash for Tesla to go up. It almost feels like Tesla is just that rebel, it's like a rebel child almost, like a teenager, where it just wants to do the opposite of what the market wants to do. When the market's red, I swear Tesla always feels like it's green, and vice versa. It's just such a strange stock sometimes. It really just decides to do its own thing. But let's talk about Tesla and let's figure out what the hell is happening with this darn stock, right? So like I said, we did close at about 212.15-ish, give or take. Now, the one thing I'm not the most happiest about is the fact that we're just having issues the second time now today, pushing back above this little resistance. Remember, see how we dropped back down here, jumped, came back down again, jumped a bit, right? We ended up essentially taking this 212.5 area, roughly, 212 to 212.5 area, and we turned into support, bounced off of it several times, beautiful. Then we broke down below it, and then we got rejected, came back up. I can't really say we got rejected here just yet. Honestly, it's not, it's not convincing enough. But like the point is, we are finding a little bit of issues right now. There are some good news here overall. Like this is a 65-minute chart. 65-minute chart, by the way, on TrendSpider. Also linked down below if you want to use it. Great charting tool. The reason I use 65-minute chart is because if you use the 1 hour chart, that means that some of the candles are uneven in terms of the amount of time per candle, right? Because there's not an exact 1 hour, in the day, right? Because the market opens at 9:30, closes at 4. There's that weird half an hour. So one of the candles is just inaccurate. So take that into account. 65 spreads it evenly across. So each candle is evenly spread across, the same time frame. So it just makes each candle have the same weight in relation to time. Anyway, the point I'm trying to make here is on the 65-minute chart, which by the way, only TrendSpider has, which is pretty cool. But it's not looking bad. And the reason I say it's not looking too bad is because the MACD, it's finally looking like it's finding some life over here, which is looking good. The RSI is peeking its head above everything else over here as well, which is good. Well, even when we were back at these levels all the way up here, the RSI is now peeking its head above all of these levels, even though we're obviously well below that, which is good. We're very, very close. Like I said, the safe thing to do, in my opinion, I've been catching too many knives, I'll be completely honest with this stupid stock. But with that being said, the safe thing to do is, a breakout out of this channel, which is a possibility on Monday. We'll see if it actually happens. And I think if it does happen, and especially if we start breaking back above, for instance, like, honestly, really just breaking out of this downward channel, in my opinion, should be enough to, at the very least, run up to about 220 to 230, which I'll talk about why that range specifically a bit later when we get to the weekly chart. But we're getting pretty close to hopefully breaking out of this downward channel. Like I said, we will. At some point, we absolutely will. I have no idea when. For all we know, we get rejected here and we can drop all the way back down to the bottom of the channel, which will be another drop of potentially like 7%, which will take us to just about $200 per share, maybe just a bit under. That is a possibility, obviously. Of course it is, right? But at some point, we will break out of this downward channel. We can't just stay in this downward channel for the rest of Tesla's lifespan, right? That's just not how things work, right? Eventually, we will break out, and that should give us a bit of a potential dead cat at this point, it seems like, rally. So we'll see what that actually ends up, coming to fruition. Now, on the 15-minute chart, same kind of idea here, right? We have a bit of a bullish divergence where as we constantly made lower lows, we constantly made higher lows on the RSI. Did we have that on the 65-minute chart? Yeah, we arguably have that on the 65-minute chart. Same idea, right? Ever since pretty much these lows over here, as we kept kind of trending downwards like this, you can see pretty much this arrow. I'll use the arrow. It's actually easier, so you can also get an arrow pointing in the right direction. So it's just maybe easier to understand. But essentially, we have an arrow pointing pretty much like this, as we're constantly making lower lows over and over and over on the 65-minute chart. While here, we pretty much did the literal opposite, right? This is, of course, like I said, a bullish divergence. Now, naturally, these things can fall apart. This isn't enough to just be like, yeah, perfect, Tesla's going to rocket from here. It absolutely can. But the point is that, these bullish divergences, it does exist. It's on a 65-minute chart or 1-hour chart, which is a pretty decent time frame to look at. And it's looking pretty decent, right? And like I said, we're also peeking our head above on the RSI of these past levels as well, where we were well above on the stock price, at least, than where we are currently. So overall, it's not looking bad. It really isn't looking too shabby here. And this is kind of what it's looking like. So, I like it. I like the situation it's building up. This feels like this might finally be the chance to, get the hell out of this downward channel. Fingers crossed, of course. You never really know for sure. Keep in mind, this week was also Opex week. There was quite some heavy in the money puts on Tesla that I showed you, guys, what was it, like a day or two ago, right? With these like super, super massive ones, right? But the point is that all has expired today. Maybe some weird volatility on Monday as these kind of puts truly kind of, quote unquote, get exercise and whatnot, right? And essentially the options market really just like finishes that cycle, if you will. Sometimes on Monday you have this kind of bleed over effect from, what happened, let's say the prior week, especially on such a massive week like Opex. But I think that, at the very least, we should start to look to break out of this channel, which is what I'll be eyeballing as the main thing. Now, if we do, we'll talk about that soon. I want to talk one more thing about something on the daily. So the daily, like I've said this many times. I know someone mentioned yesterday how they're surprised I didn't mention it, but I've said it many times. I'll say it again just for the sake of mentioning it. We are oversold. Absolutely. There's no question about it, right? We are approaching some pretty substantial levels. The most substantial level Tesla has approached on the daily was when Elon was selling. This is when we approached like a pretty astronomical levels of like 12 on the RSI, which is just like almost unheard of. Like it's pretty rare to get that low. Like I don't think Tesla has ever it's only gotten that low once before, like the Elon selling part, which was a 16, which was back over here in 2020 of March after it fell a pretty substantial amount. Actually, Tesla fell about 60%, and even that only got it to about 16 on the RSI. Now we're sitting at a level that, is pretty oversold. Like this is the level Tesla usually gets to. And even this level, it's not every single time it gets to, but we're pretty much at the level where it's arguably pretty ridiculously oversold. Like this, again, it can stay oversold and it can get more oversold. That is an absolute possibility. But some people are calling for like 170s right away. I don't think we'll get that. I'll be genuinely surprised. It's not impossible, but something pretty massive would have to happen. With Tesla, you never know. Something can happen. But something pretty substantial will have to happen for Tesla to just continue just falling down from here. The worst case I see before at least some bounce, some dead cat, some relief is going to be pretty much in this massive green rectangle, right? This massive green rectangle, which is pretty much anywhere between, this kind of rough area that we've been at, which is the 212, 213, 214, whatever, to as low as pretty much roughly around this kind of just about 200, if not slightly below like 195-ish, right? Which is where we bottomed out all the way here in late October. That's kind of the way I look at it, right? So that's the main thing I am personally paying attention to right now. Now, another thing that's interesting to note is the fact that on the daily, do we have? No, we don't. But on the weekly, we do have. Actually, no. One more thing I'll talk about here is this yellow line, right? Don't forget this yellow line. So there's two trend lines that we have, right? One trend line is all the way down from the lows over here at about $100 per share. The other trend line, which we did break down below, which isn't great, but there is another trend line that you can also make an argument that is the more correct one, potentially relative to the situation we find ourselves in, because we had a massive rally, we came down, and then this rally technically only really truly started off of this pivot point right over here, which, is again what started this whole situation pretty much, essentially, right? So some people are arguing the fact that this is the more correct, if you will, trend line, this yellow line, because, that's where it started from, really, this whole situation. So if that's the case, then we're pretty much trading right at the bottom of it right now. We bounced off of a one time over here, and now we're pretty much dancing right around it once again, give or take. And we'll see if that's pretty much the area that we hopefully, fingers crossed, to bounce off again. The MACD is obviously pretty darn oversold, or it's like, it's extended to the south side pretty substantially here as well. And like the stochastic that we just showed over here, pretty similar idea to the RSI. Also at pretty substantial levels. And if we zoom in, very, very closely here, let me go ahead and, what is going on here? Let me go ahead and go here. Let me go ahead and recenter this like this a little bit. And as we just really zoom in as much as we possibly can, right? You can see the stochastic, the blue line, is pretty much just ever so slightly finally crossing the red line, right? Crossing back over, kind of similar to the MACD-ish with the green and the red line, but it's crossing just barely over, showing that maybe it's not only stabilized, but it's potentially getting ready for that move up. So we'll see. You can only fall so much further before it just gets completely ridiculous. And we're, in my opinion, pretty darn close to that right here, right now. So, we'll see how that plays out. Now, that trend line is important, so pay attention to that. Now, moving over to the weekly time frame, also pretty important. Very quick thing to talk about. Same yellow line right here. You can see looks a little bit more clean, if you will, on the weekly, right? It's from down over here, we touch point here, and then we pretty much not only touch point, but we arguably closed, above that line on the weekly, which isn't the worst thing in the world, right? There is potential here. There is some potential. But what I personally also see on the weekly potentially here is the fact that there might be some hidden bullish divergence setting up, which I did talk about yesterday, the day before, where essentially it's, as the RSI, in this case right here, is making lower lows, which it is right now. Again, not the most convincing one, but still making lower lows. The stock itself is arguably making, if not the same lows, higher lows, or at the very least, the same lows. And at the moment, we're technically making at least for now, a higher low compared to this candle right over here, which was at about 209. We closed at about 212, right? And that's the low point over here that we're comparing it to in terms of the lower low on the RSI. So that's a bit of a hidden bullish divergence. We'll see that actually comes to fruition as well. But all in all, that's the main thing I'm looking at, right? If there's a place to bounce, it's pretty much going to be within this green rectangle. Could be a little bit lower, potentially maybe, early next week. Maybe earnings actually gives us a bit of a drop and then we get a massive rally from there. But I do expect something along the lines of this, right? Whether it's from here, whether we drop down a little bit further to, let's say, 205, maybe slightly around, around there, maybe a little bit lower, maybe a little bit higher, but just that general range. I personally expect something like this. And this is going to be really important, right? Let's just for now assume it's going to be just from here, just for the sake of demonstrational purposes, right? I personally think next week or maybe the week after, but pretty much the last 2 weeks, if not next week of January, to pretty much bring us back to around 220 to 230. So for now, we'll say 225 in the middle, roughly. This is important, and the reason I say this is important is because this determines what happens next. Is this just a dead cat bounce? Are we just getting a relief bounce, which usually in that scenario will just mean that, well, we're going to get even more pain moving forward, and we're probably going to be making our way back down even further. And that's where, in my opinion, we can start looking for the 180s, the 170s, things like that, which would be essentially the bottom part of this, descending channel, if you will, or quote unquote bull flag, if you will, that we're still technically in. So take that into consideration that this is a possibility. Now, that's assuming we reject. So that's going to be really important to see how this would play out and how we react to that 220, 230 situation. That's going to be important. Where's the 21 here? Yeah, 21 is probably going to catch up to us as well pretty soon. Now, that's important. But the other option is, let's say we do come up here and let's say we do break above 230, for instance, right? 230 would be probably the more important level, in my opinion, to really break above and really start closing and holding above. If we do happen to break above about 230-ish, that to me is going to start signaling that maybe this is the bottom. Maybe the bottom is in. Maybe this was nothing more than a false breakdown. Maybe this yellow line was the actual trend line itself to begin with, right? But that to me is going to signal the fact that this was a bear trap. And now Tesla is going to, of course, potentially get a pretty substantial reversal. Obviously, that's going to come up to how we react on the next bounce, which is coming at some point. Who knows when, but it is coming. That's going to be the most important part I'll be looking at. But that's kind of the main thing. Obviously, otherwise, Tesla is still looking kind of bearish overall, other than the potential bounce that can potentially turn things around. Still below pretty much every moving average on the daily and on the weekly. Not looking too hot. There is definitely work for the bulls to do here. There's a lot of work for the bulls to do here to turn it around. But if there is a place to turn it around, it would be pretty much generally right around here. So we'll see how that plays out. Now, the thing that's interesting that I want to mention also is this Cheddar Flow app, right, which is, again, an options flow chart or site, which is great. I just ended up essentially partnering with them. And I am going to have a full account next week, which I'll show you guys even more information like, dark pool flows and things like that. Anyway, what I'm trying to make here is the fact that Tesla, is looking a little bit bullish here, right? The more important thing to note is the fact that the time frames over here, pretty much in the last 15 minutes of the day, a lot of calls came in. Like throughout the day, you had a mix of flow, right? You had a mix of calls, you had a mix of puts throughout the day, whatever. But here towards the last 15 minutes of the day, we had one put come in for 54K premium, but we had a lot of calls come in, a lot of urgency, a lot of sweeps, a lot of blocks, right? Some unusual ones coming in as well, and some pretty decent premiums. For instance, we have a 400K sweep premium for a strike of 210 call at the ask, which is good. Ideally above the ask is even better, but at the ask is still not bad. And it's looking, potentially pretty decent. So a lot of calls essentially came in towards pretty much the last 15 minutes of the day, which is usually when people with a lot of money usually end up placing their bets towards the end of most days, because that's usually when the candle is closing. You get a better idea as to how things are looking, and you're not really wasting any time during the intraday movement that's just kind of eating away your premium. You're just kind of getting in right there, and you're good to go. It's usually the smarter thing to do for options, in my opinion, at least, or even just trading in general. But The point I'm trying to make is, again, a lot of options flow came in for Tesla towards the end of the day. A lot of calls, a lot of bullish flow, some unusual as well, which is good to see, which means that, there's a more sense of urgency in terms of, getting into this position, probably because they expect something, right? For instance, there's one here for only 30K premium, of course, nothing major, but 280 call. We have a 280 call up here, 100K premium block, right? We have a 220 call over here, 200K premium. So we'll see how this plays out. But pretty interesting to note that it all came in pretty much in the last 15 minutes of the day, and we'll see what comes from it as well. And notice how pretty much the vast majority of them are for next week's expiration. So that's also important too. So regardless, thanks for watching. If you enjoyed the video, of course, as usual, don't forget to hit that like button, and I'll see you next time. Peace.